Okay, good morning. Tuesday, 16th of May. Just getting the briefing underway and going straight to the charts this morning. Both major pairs supported up around their higher end of recent ranges. Certainly multi-month highs being pressed here in Euro-dollar this morning. We'll get into the details of the reasoning here, but you can see both pairs higher, so predominantly led by dollar weakness, which we've seen really occurring over the last couple of days. Some news from Donald Trump overnight, which we'll take a closer look at, which has caused this latest round of dollar selling. And certainly from a fundamentals perspective in the short term, there's been a bit of a change around in sentiment. If I just kind of bring the euro into shot, it's been a phenomenally strong rally that we've seen really since Friday. You remember on 1:30 we had the release of the inflation readings, with retail sales out of the US was a little bit softer than expected, in combination with the Empire reading as well. First time it's turned negative in Empire manufacturing. You had yesterday in the US, I think it was the headline reading since October of 2016. So economic data certainly starting to slow down slightly from what had been a phenomenally strong performance the US had been putting in since kind of the inauguration of Trump at the back end of last year and the beginning of this year. And this is coming, of course, in the context of political uncertainty dissipating in Europe. The Macron victory, the solid performance in the German state elections from Angela Merkel, most notably in the state of North Rhine-Westphalia, the most populous region in Germany, on Sunday, has meant that some of these concerns, particularly over France, Germany, and obviously Italy as well, has gone away as the kind of continuity, if you like, of the more pro-European figures has kind of won out. That in combination with fairly robust economic data coming out of Europe. We've seen recent weeks the PMI data being fairly strong, inflationary pressures not shooting higher but picking up. So that has seen the euro dynamic kind of become more positive in the context of the US picture almost materially weakening to some extent. That's consequently helping drive this pair higher at the moment from a fundamental point of view. Technically speaking as well, this morning quite interesting. Obviously we had, this is an old chart I had marked up from a lecture where we had the gap up, obviously following the qualification, if you like, of Macron going through against Le Pen. People saw that as a done deal, very unlikely Le Pen was going to win, and so the market already bought into the idea that the kind of worst case had been averted. A little bit of fluctuation within the range until we got the confirmation of the second round, the final round victory of Macron. We gapped up briefly before some profit taking materialized, and then we've had this latest rally really based upon more dollar weakness than euro strength, I'd say. But importantly this morning, not only have we launched above the 110 handle, but we've also surmounted that previous high. So that French election high has now been broken on the upside, which was seen at 110.36, and we're sitting about 15 pips above that at the moment this morning. Slightly longer time frame, looking at a daily continuation, certainly this now does open up further moves. You'd say technically on the upside. You had the, well, if we look at that spike on that wick that you can see there, lo and behold, that's the 9th of November. You know what happened on that evening. That was when you had extremely high volatility. That was the night, of course, of the US election. We momentarily printed up at around a 113 handle before obviously people started to buy into the whole Trump trade, Trumpflation and so on. That actually contributed to some dollar strength thereafter, but the initial reaction was a negative one for the dollar at least, and so that's slightly more longer time frame, and I would imagine that the ECB would be fairly uncomfortable with euro as we start to go ever higher, and the pressures that might put on some economies, particularly the likes of the Germans, for instance, who, looking on the breakdown of their components of their index, are fairly export driven. Nonetheless, though, looking at the equity markets this morning, still positive. Europe was a little bit underperforming that of the US yesterday. Starting with the US charts, we saw a fairly powerful move through the cash equity open in the US yesterday. Now, Empire, of course, came out at 130, and it was an hour later the cash open really shot higher. But I think this strength was a couple of different things at play, both fundamentally and technically. You can see here from a technical perspective, we broke the kind of highs that were seen mid last week, and also the Tuesday high. That probably also helped some of the move higher. But from a monetary policy point of view, people have started to pull back slightly this 100% almost priced in prospect of a June rate hike. It's now tracking at around the low 70% probability, so still very much likely to happen. But certainly the weakness of economic data of late has caused a slight re-evaluation of the situation, and obviously we know how equities tend to react in an environment where interest rate hike prospects get reduced. It tends to be equity supportive. The more important thing though here was yesterday, obviously we had a really big ramp up in oil prices, the further commitment, Russia and Saudi Arabia looking to extend cuts now for 9 months, so to March of 2018. The market liked that, and those associated names helping lift the S&P on a sector breakdown in the energy space. Also, industrial metals saw a pretty strong day on the back of the kind of Silk Road, the infrastructure talks coming out of China from a big conference they've been holding in Beijing. This large-scale infrastructure building seen obviously as positive for industrial metals and demand side, so they shot higher. So the whole kind of basic resource sector saw a pretty strong day yesterday. So equity markets since then though in the S&P, you can see now we've kind of fallen into what is really consolidation mode. You can see it's locked in between that previous high that we had on the 10th, which is defining really by pivot level on the daily markings on the chart. Upside then you've got that 2400 was that previous high, and then the yesterday high point at 2402 and a quarter, which was just shy of the kind of record high levels post briefly that election victory from Macron. Europe though didn't perform quite so robustly, but this morning it is having another decent look on the upside, and so keeping an eye here on the DAX. We did actually momentarily at the futures open to get things underway yesterday, we did print fresh record all-time highs in the DAX, and so certainly that's something to just keep an eye on once again on the upside. 12,843 and a half, not too far from that at the moment. Oil wise, things have quietened down quite a bit from, well, certainly in comparison to this time yesterday. Just having a look on the chart, that was obviously, it was around just after 3:30 AM London time when that news kind of broke. The news coming at a fairly irregular time of day because the conversation between Saudi and Russian energy officials was happening in Beijing. Obviously they're 8 hours or so ahead of us, and so the move came pretty early hours of the morning. Europe then came in, and this is what you tend to see is a kind of a dual reaction. You get the initial kind of maybe algo reaction to the news, if you like, overnight spec traders in Asia Pac, but then Europe comes in, and then you get the actually a bigger, more sustained move as they react to that information. Where we are at the moment, we've kind of, again, almost consolidation after a pretty decent up day from yesterday, defined by support downside from pivot thus far this morning. You got close to it, about 5 cents away from testing that level at 48.74 before just sitting now back at that $49 handle. So market seemingly buying into this idea of OPEC are willing to do whatever it takes, was the exact phrase that they said. But also in the context of inventories, obviously we had some of the biggest drawdowns in API and DOEs last week that we've had since 2016. Genscape, which is seen as the third-party provider of data analytics of inventory levels, they reported yesterday a drawdown of about 500,000. So it's still seemingly inventories are being reduced, but we'll look to the APIs to really drive as to what level, if that is continuing. Stockpiles are being shrunk at the moment. So oil quite comfortable sitting around where it is, which actually in effect is relatively flat on the session. We're only up marginally about 18 cents, but certainly that's helped the kind of equity sentiment as well in the last 24 hours. Okay, quick look then at the main story overnight, because it's really been just one story. There hasn't been a great deal ongoing in terms of market direct movement, and it's been Donald Trump, where he's facing outcry over ISIS intelligence handling. Essentially, the headline, you've probably read it by now, he's facing a backlash after reports the US president had endangered national security by sharing highly classified information in an Oval Office meeting with, you guessed it right, none other than the Russians. So 1 week after firing of the FBI Director Comey over his investigation into potential mispractice, if you like, of Russia's involvement during the US election, Donald Trump has now been giving highly classified information to the Russians' top diplomats. Make of that what you may. But essentially what this is leading to then is more criticism about his relationship with them, and then because basically the level of detail that he's said to have given is more than he would give to his own allies. And so again, question marks on whether he is able to manage the home security of the US effectively, is also going to then probably create more disruption to his ability when he starts bringing about more market-related policies like the fiscal infrastructure-related ones, corporate tax and so on and so forth. Again, it's almost from a market's perspective, the more of this type of thing that happens, the more it delays the reasoning why the market bought into the Trump trade so much in the first place to push these equity valuations to all-time highs. This kind of emphasis, if you like, to implement is getting pushed further and further down the line by these more regular occurrence of these mishaps that seemingly seem to start occurring from Trump. Looking at the dollar, I thought I'd bring this up. This is actually the dollar index. So as a measurement of all the kind of currencies within the basket against the dollar. And I just wanted to show this to you to show the weakness that it's been under since this catalyst being the weaker than expected US inflation data on Friday with the soft retail sales report. We then saw yesterday Empire Manufacturing was also weak. Then this morning or overnight, Trump in the Washington Post unveiling this latest story about him leaking highly confidential information to the Russians, further dollar selling. So, you know, when you're looking at the kind of context, this goes all the way back to the beginning of the briefing, how the picture has changed now between a more positive dynamic for Europe, i.e. the euro currency, comparative to the US at this present point in time. Hence the reason why, you know, you've had such a powerful up move in the euro currency today. Even though we've kind of ran out a bit of a steam after that initial run higher, I think you had maybe a potential chance on that move earlier at 110.36 to carry it to R2. But now when we come back down, or if we do, you'll be interested to see how well that acts as potentially another level to get long again at 110.36 if it comes back down to that point. Still favouring the long at this point in terms of the euro-dollar pair. DAX, as I said, just coming up now close to those all-time highs again, as well as another level to be on the radar. Okay, moving over, let's have a quick look at the pound, because it's the pound that's really going to take centre stage not only today but this week. A lot of economic data coming out of the UK, and today is probably the most important one of the week, and that's because today sees the release of UK inflation. Just taking a quick stock take of where things lie at the moment, you'll remember that UK inflation last time was a bit of a surprise because we'd been on a fairly incremental incline all the way since October of 2016 of rising inflation. This is what you've been reading about. Price of goods in the UK has been going up as a laggard effect of the sharp depreciation of the pound post the EU referendum last summer. And we are anticipating today that inflation will have ticked up once again. If we go back to the calendar, year-on-year inflation is expected at 2.6%. Obviously, this is pushing further and further away from the Bank of England's target, which of course lies at 2%. If you were to look at 2.6, to put it in some perspective, 2.6 would be looking at multi-year highs dating back to really, you're looking at 2013 type period, from when we were last at those types of levels. This is important because depending on how high inflation is, will really dictate the hand of any potential action from the Bank of England. Now at this point, we saw the quarterly inflation report last week, and it was talking about they had slightly altered their perception of the way that they see inflation playing out. Basically, they've changed the curve of forecast to be higher inflation coming at the moment. It's going to peak slightly higher, just above 2.8%. Before then, it slows down more dramatically than what they previously foresaw in February. So in 2018-19, that's hence the reason why the market perceived from a price point of view, if we actually go back on the charts here to when Super Thursday happened, this was the reaction. And it was that perception then that actually, despite inflation picking up near term, they actually see it dropping off more sharply than they did previously. So lessening the need then, the Bank of England being fairly confident that they're not going to be forced into hiking rates by inflation running away to the upside. Now that's not to say that that still might not happen. If inflation today comes in excess of 2.6, let's say it comes in 2.7, 2.8%, I think that would be very unlikely to be that high a jump that quickly. But if it did, then obviously it materially changes probably the market's outlook on where the top ceiling would be to inflation going forward. Whether that would be the Bank of England saying 2.8, the market would probably perceive it to be much higher. What would that result in? Would be probably initial knee-jerk reaction this morning, the pound would shoot higher. At the moment though, what's quite interesting to see is dollar weakness is obviously one part of the puzzle, which is helping lift cable off pivot back to R1 this morning. But a lot of this might be a little bit of pre-positioning, with people expecting inflation to pick up from 2.3 to 2.6%. Remember, 2.6 is the consensus. What happens then is that I'd keep an eye between now and 9:30 on the movement of sterling, because to factor in and to be able to trade the number effectively, you need to look at the pre-positioning movement. And by that I mean, if we gradually edge up here up to around that high that we had yesterday morning at 129.53, in effect, then the market has already priced in to a large extent probably the consensus figure of 2.6. Then what you might get is confirmation of the number. You get an initial blip higher, fast money move, before then actually it's more of a buy the rumor, sell the fact type price reaction that you get. How far that buy the rumor, sell the fact actually materializes, the latter would be on the performance of the dollar as well, which has weakened already quite substantially. So looking beyond that previous high from yesterday, if we start to change the time frames out a little bit, $130's really been the big line or upside point to look at. I mean, if we start looking at this previous chart I had marked up from a talk I did the other day, this was the UK snap election, and really since that point we've had two areas of consolidation. One was particularly confined, which was immediately after she announced the snap election, obviously, which we know will be the 8th of June. But then breaking upon that has been this 128.46 to kind of 130. Certainly if the inflation readings are kind of 2.7, 2.8%, that in the context of a weaker dollar environment, I would certainly say brings in the prospect of that 130 handle being tested once again today. If it does get tested, obviously it's acted as a a couple times as a key level. I would imagine there's going to be a couple of stops probably sitting just above the figure, so any material breach of that is likely to add to a fairly quick run higher. Looking slightly longer time frames, obviously there's not a great deal above here at 130 should we break that with more conviction on the upside. Technically, certainly the next realm of interest starts to not really come in until 135 on the upside, and obviously that's a much more longer time frame if we were to get to those types of levels. So that's the upside. On the downside, certainly a weak inflation number. Let's not forget we did get caught slightly by surprise, the fact that inflation was just maintained at 2.3% last month. Now cable has been edging higher really since yesterday evening, and so you would imagine then a pullback to 129, the low from yesterday afternoon 128.94, and then below at S1 definitely can't be ruled out in the opposite situation where we actually don't get inflation rising and we get the status quo, and actually we're not seeing a build up of it actually materializing in the consumer price index at this point. That would be the reverse case scenario. So a couple things there. Remember to keep in mind where the currency has been over the morning and the prior few days to ascertain how much of a higher number has already been factored into the market. Therefore, don't get caught out by hearing 2.6 and thinking, well, this is an immediate long. Actually, a lot of that might have already been factored in. If we do get a higher number though, a 2.7 type print or beyond, then certainly I'd say there's some interesting levels to look at on the upside for cable, particularly as I said in the context of a weaker dollar at present. Okay, the other figure to be aware of this morning, 10 o'clock German ZEW Economic Sentiment Index. This is probably the second most important number, or certainly tier 1 that you get from Germany. IFO, probably the PMI is very important, but ZEW is quite up there in the impact potential it could have. And I point this out in particular because last month we had a reading of 19.5. 19.5 was much higher than expected 14. It was in fact the highest since August of 2015. And so you'd have to go back quite some time. You can see here to this kind of period when we were much higher. It'll be interesting to see how well this is holding up. Remember, ZEW, unlike IFO, which is companies, ZEW is about economists and analysts forward-looking assessment of economic conditions. Otherwise, for the calendar for the US session, things are a little bit more busy than yesterday. You've got housing numbers, building permits, housing starts at 130, industrial production coming in with cap utilization at 215, the oil inventory numbers as per usual not until much later in the evening. One other point though to put in your calendars, which isn't actually on here, which you definitely need to be mindful of, particularly if you're trading oil, is you've got the IEA's oil market report. I've been told that that's coming out at 10 o'clock this morning. Obviously in the context of people looking at this inventory situation very closely, and also amid the talk about further extension of the production cuts, this will be something to keep a very close eye on. So 10 o'clock, the IEA oil market report to add to your calendar. Speaker-wise, the only one really when we're going to be in the market is going to be ECB's Novotny, so the representative of the Austrian Central Bank, slightly leaning on the hawkish side, speaking at European cash close at 4:30. But that pretty much wraps up your day. So peak of interest will be a couple things. The UK CPI data coming out at 9:30, it's just around a half an hour's time. That'll be one of the bigger events of the day. I'd also be mindful of keeping an eye on the dollar in general. It'd be interesting to see when the US come in, how they react to this Washington Post story, whether we get any further extension of dollar selling. The one thing I am mindful of is the dollar has sold off quite a lot in the period since Friday afternoon. So how much of the dollar weakness is kind of also being priced in would dictate as well how much I feel as though both these pairs can continue to push higher. Obviously the added catalyst could be a high inflation print. If we break 130, you might get a bit of a further extension short term in sterling gains. Okay guys, that's your briefing for this morning. It's come up to 9 o'clock. Any questions, of course, just let me know in the chat room. Otherwise, have a good session, and I'll see you in the chat room. Thank you.